Hey everyone, welcome back to Upside Down Data. This is a brief update about the current state of the upside downside potential indicator for Bitcoin, Ethereum, and the 21 altcoins that we're currently monitoring. So if you guys like the content, subscribe to the channel, turn on your notifications, give the video a like, we'd really appreciate that. And also don't forget to follow us on Twitter at Upside Down Data. We put out regular updates there about the UDPI and more. So, if you've seen our previous videos, you're pretty familiar by now with the upside downside potential indicator, but a refresher never hurts. And for those new folks, let me explain to you what you're looking at. These are risk gauges for these 23 assets. And the scale goes from -5, which is green, and that indicates that risk is at its lowest point. And that means that downside potential is limited, whereas upside potential is quite extensive. So when we see a reading in the negative territory, or a needle pointed to the left, that means that there's more upside potential that the model considers to be realistic than downside potential. Exactly the opposite on the plus side, when the needle is pointed to the right. And so when we see these readings in the red territory, approaching +5, that indicates that there's plenty of realistic downside potential for the near future, as far as the model is concerned, and limited upside potential that's realistic. Now, we have just expanded our offerings here. So we've been talking for a few months now about the UDPI, one version of the UDPI. But if you saw our video the other day, and if you haven't had a chance to yet, I recommend checking it out, introducing this version 2 of the UDPI, which has a couple of key optimizations. I'm not going to talk about the technical side of that right now because what I want to focus on is the different timeframes, because this version 2 of the UDPI can be instructed to focus on different kinds of risk. So rather than having one risk gauge for each asset, we now have 3 risk gauges for each asset, and those refer to long-term, medium-term, and short-term risk. This enables us to diagnose risk with more precision. It also enables any of you to trade multiple timeframes using these UDPIs. So we can both be active traders, or we can calibrate our expectations both for the short term and for the long term at the same time. That's exactly what I want to do in this video. What I have up here is the 23 risk gauges for the medium term, and I'm not going to focus on the long term in this video because we've been talking about that a lot, but I'm going to focus on the medium term and the short term, because what's been happening today is that this downtrend that the market has been in has been continuing. We just lost the 46K level today, and as I make this video, price of Bitcoin is sitting at about 43,500, which is approaching the most recent bottom. Back in December, there was this massive wick when the price dropped, and that went down to 42K, and then the price saw a massive bounce. That's what I mean when I refer to a wick. It was a very quick drop down to 42K, and then the price jumped back up to the mid to upper 40s. And what happened there was a liquidation cascade. There were longs, there were people who were betting on the price going up, who, when the price went down, they were forced to cover their positions. They were forced to sell in order to minimize their losses. And that can create a cascade which pushes price down more quickly, but that tends to be a short-lived event. So when you get those cascades, you tend to see these big wicks back up. But oftentimes, over the subsequent period, you'll see price retest those bottoms. We saw that back in the summer. So, when the price crashed in May and then went into this extended consolidation period, which lasted until the end of July, we saw that indeed the price of Bitcoin grinded down toward the bottom of that wick and actually went below it. I'm referring again to the spring and summer, not to this most recent drawdown. And then, it tested that low of that wick. It tested that bottom for a second time, and then it bounced up very quickly. And that began a change of character in the market. It seemed to take us out of the downtrend, move us back into an uptrend. Right now, what we're seeing is that in this new version that began in November, and really that drop in December is put us where we are now in the low to mid 40Ks. we're now seeing something potentially similar playing out where the price is moving back down toward the bottom of that wick and has not reached it yet, but it is a key level. And it's not shocking at the very least that it's revisiting that level. So given that, I want to take a look at what the risk information is telling us, especially about the short and medium term. As we've noted in our in a number of recent videos, the long-term risk profile of the market is still relatively attractive. The long-term UDPI for Bitcoin is now at about minus 2.3, which indicates that it's not at historically oversold levels. This is not like a once in a lifetime opportunity to buy low risk Bitcoin, but it is fairly low risk, and minus 2.3 tends to be in the long term a profitable entry. But again, I want to look at a shorter term time frame here. So we have these medium term UDPIs up, and medium term you can think of as being on the scale of weeks to months. Long term would be a scale of multiple months. Medium term would be a scale of a few weeks up to a month or two. And short term would be a period of days up to weeks. So we're looking at the medium term here, and what we can see is that there's a lot of variability across the charts. The average risk, if we just take the 21 altcoins here, is minus 1.07. So if we look at Bitcoin on its own, we see that the medium-term risk is minus 1.84, which again is relatively favorable, but does not preclude the possibility of further downside in the medium term. And Ethereum is right at neutrality. So there's really no edge on Ethereum when we look at the medium-term chart. But those other 21 are pointed to the left on average, minus 1.07. But within that, there's a lot of variability. So we go from Kusama, for example, which is a minus 4.15, all the way to much higher risk assets in the medium term. Luna, for example, which is plus 2.57, which reflects the extended uptrend that Luna has continued even as the rest of the market has pulled back. So what we can gain from this is, we can see that the market is telling us that there's more upside potential than downside potential in the medium term, but that by no means is it unlikely that more downside could come. There's nothing about what we're seeing here that indicates that the downside potential for the medium term, again, being on the scale of weeks and maybe up to a month or two, there's nothing about this that tells us that that has to be tapped out. And so we have to be prepared for every eventuality here. So again, the long-term risk profile is more favorable, which means that within the grand scheme of the market cycle, we're looking at, in the minus 2 to minus 3 range for many assets, and for including Bitcoin and the average profile across the market. But as we get into shorter time frames here, we're seeing that that's a little bit less clear, which means that there is more downside potential that is realistic. Not that it has to happen, but it is realistic as far as the model is concerned. So again, as we've seen the price draw back into this 43 to 44K range, we have to be prepared for the possibility that that's going to continue. After all, we've been in a downtrend now for a couple of months, and trends, the trend is your friend until it ends, as they say. So we haven't seen the trend end just yet, and this is what we're seeing on the medium term. If we look at the short term, I think that makes it even more clear, because we actually have an average here. If we look at those 21 altcoins, again, treating Bitcoin and Ethereum as their own beasts, if we average across the 21 altcoins, we're actually in positive territory on the short term. It's a plus 0.32, which is basically neutral and indicates that in the short term, there's not much of an edge to be had by looking at the UDPI, which means that we have to be open-minded and we have to be prepared for every eventuality. That 42K level is key. 40K is also key. That's a psychological level, a round number. Prices often tend to visit those. And so it wouldn't at all be surprising in the short term to see the price of Bitcoin visit those levels. And of course, if it does, it's going to take the rest of the market with it, as it's been doing today. So that's kind of the picture across all of these assets. If we just look at Bitcoin on its own, sitting at minus 0.46, pretty neutral territory, really not too much of an edge to be had, although that's creeping down, obviously, as the price does. Ethereum at plus 0.69, positive territory, but again, not very extended in either direction, pretty close to a stable equilibrium there. So really not too much of an edge. If we're looking at specific assets, Phantom, for example, is at plus 3.31. Phantom has been a very high performer recently. So this should come as no surprise. If you have a Phantom position, then you should be aware that right now on the short term is quite a risky time to be holding Phantom. On the medium term, not so much. It's at a plus 0.86, so relatively neutral, and that's even more the case on the long term, where it's sitting in neutral territory. So there's something to panic about if you're a Phantom holder. Indeed, this is probably not the top on the macro scale, and the price of Phantom could very well continue to make moves to the upside, possibly very nice moves in time. But in the short term, be aware that it's overextended. It's fairly risky at these levels. And so it would not at all be surprising if we saw a correction come in. Similar things could be said about Atom. Atom and Phantom have been running in tandem. Interesting to see because it seems to suggest that this layer one narrative of these smart contract platforms, which have been performing very well over the last year, is continuing. So, we saw Solana, Avalanche, and Luna, which people are calling Solu AVAX. I think I got that right. Anyway, those are kind of the big three beyond Ethereum, but not far behind are assets like Phantom and Atom, and they've been performing very well and are a bit overextended now in the short term. That's not true of all of them, though. I mean, Kusama is also pretty oversold, even on the short term here. So that doesn't mean that Kusama can't go lower. It certainly can, but the ones that we would expect to get hammered the hardest if this downtrend were to continue are the ones that are higher risk. So be aware of that. That's what this indicates. When the market is bearish, the higher risk assets are particularly prone to very substantial drawdowns. That's the situation here in the short term. So again, we want to be cognizant of multiple time frames here. On the macro scale, if I pull up just Bitcoin and Ethereum so we can look at the long, medium, and short term alongside each other, on the macro scale, we're still definitely an accumulation zone. So if you were treating the UDPI as a guide to make entries and exits into the market, which is one way that you could use it, we would still, without question, be in an accumulation zone for Bitcoin. But maybe not a point where you would go all in because the risk level could continue to grind down. And if we saw it reaching -3, -4, and then approaching that -5 level, you'd want to have some dry powder. You'd want to have some ammunition left that you could deploy at those more favorable levels. But if you're taking a dollar cost averaging approach, which is recommended, not financial advice, but it's a good strategy for getting an average entry that will work out in the long term, then I think we're still firmly in accumulation territory for Bitcoin. You can see that on the medium term too. But again, on the short term, that's not at all clear. There's not much edge to be had on the short term. Ethereum, even on the long term, is a little bit less clear. I mean, this reflects Ethereum's outperformance at the beginning stages of this drawdown. So in November, when we saw the price reversing from the 69K region, Ethereum continued to push to the upside even as Bitcoin reversed to the downside, but that didn't last. So Ethereum was up. Its long-term UDPI risk was up close to +2. It's now corrected and is now sitting in pretty much neutral territory. So not clear what to expect with Ethereum, but not extremely overextended by any stretch of the imagination. So again, this is both to kind of give you a sense of where things stand right now and to give you a sense of how we can use these multiple time frames to try to keep multiple thoughts in our head at one time. We want to be focused on the macro, but we also want to be sensitive to the micro, and we want to understand that it's not up only, even when we see risk on the macro scale reaching these more favorable levels like we see with Bitcoin at that -2.3. So we're going to continue to bring you guys this information so that you can think about this in terms of multiple time frames, and you can pick and choose what's most useful and most relevant to you. So hope you found this useful. That's all for now. Remember, with the UDPI, WA GMI.